Govind everyone, welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge etc. Today I will discuss about JAIIB examination related MCQs. If you are preparing for JAIIB examination or looking to strengthen your banking knowledge, you are in the right place. Welcome to part 28 of my Path to the Corner Office JAIIB examination series, where I will break down real JIV examination related MCQs and provide clear, practical explanations to help you strengthen concepts and progress faster in your banking career. Today's MCQ subject topic Paper 1 Indian Economy and Indian Financial Systems. Module C Indian Financial Architecture. Reforms and developments in the banking sector. Bad banks, infrastructure financing, formation or role of NAB, FID, National Bank for Financing, infrastructure and development, basic concepts on each. Question. The concept of a bad bank is primarily aimed at option A. Increasing deposits. Option B. Managing non-performing assets, NPH. Option C. Promoting retail loans. Option D. Reducing CRR. Correct answer is option B. Managing non-performing assets, NPH. Question. A bad bank mainly purchases option A. Performing assets. Option B. Government securities. Option C. Trade and bad loans. Option D. Gold reserves. Correct answer is option C. Trade and bad loans. Question. The Indian bad bank structure includes option A. RBI and SEBI. Option B. NARCL and IDRCL. Option C. NABARD and SIDBI. Option D. LIC and GIC. Correct answer is option B. NARCL and IDRCL. NARCL stands for option A. National Asset Recovery and Credit Limited. Option B. National Asset Reconstruction Company Limited. Option C. National Asset Regulation Corporation Limited. Option D. National Asset Regulatory Company Limited. Correct answer is option B. National Asset Reconstruction Company Limited. Question. The primary objective of NARCL is to option A. Provide fresh loans. Option B. Take over stressed assets from banks. Option C. Regulate NBFCs. Option D. Issue currency. Correct answer is option B. Take over stressed assets from banks. Question. Infrastructure financing mainly refers to funding for option A. Retail trade. Option B. Agriculture only. Option C. Large public utility projects like roads and power. Option D. Consumer durables. Correct answer is option C. Large public utility projects like roads and power. Question. Infrastructure projects require financing mainly because they option A have short gestation period. Option B require small investments. Option C have long gestation period and high capital needs. Option D do not involve risk. Correct answer is option C have long gestation period and high capital needs. Question. One major issue infrastructure financing by banks is option A excess liquidity, option B asset liability mismatch, option C low demand, option D high CRR. Correct answer is option B asset liability mismatch. Question. NABFID stands for Option A, National Bank for Financial Inclusion and Development. Option B, National Bank for Financing Infrastructure and Development. Option C, National Banking Fund for Infrastructure Development. Option D, National Board for Financial Infrastructure Development. Correct answer is option B, National Bank for Financing Infrastructure and Development. Question. NABFID was established in the year option A 2018, option B 2019, option C 2021, option D 2023. Correct answer is option C 2021. Question. NABFID was set up primarily to option A regulate banks, option B fund retail loans, option C support long-term infrastructure financing, option D replace RBI. Correct answer is option C support long-term infrastructure financing. Question. NABFID is classified as a option A commercial bank, option B cooperative bank, option C development financial institution, option D NBFC MFI. Correct answer is option C development financial institution. Question. One objective of NABFID is to option A reduce inflation, option B develop bond and loan markets, option C control exchange rate, option D provide microfinance. Correct answer is option B develop bond and loan markets. Question. EASE stands for option A enhanced access and service efficiency, option B enhanced accountability and service excellence, option C enhanced access and service excellence, option D economic advancement and service expansion. Correct answer is option C enhanced access and service excellence. Question. Each reforms are related to option A insurance companies, option B pension sector, option C public sector banks, option D NBFCs. Correct answer is option C public sector banks. Question. Each reforms are launched in option A 2016, option B 2018, option C 2020, option D 2022. Correct answer is option B 2018. Question. The primary objective of each reforms is to option A nationalize private banks, option B improve governance and the customer service in PSBs, option C reduce competition, option D eliminate digital banking. Correct answer is option B improve governance and customer service in PSBs. Question. Each agenda focuses on option A capital market reforms, option B responsible banking and customer responsiveness, option C insurance penetration, option D pension reforms. Correct answer is option B responsible banking and customer responsiveness. Question. The concept of a bad bank helps banks to option A increase NPAs, option B clean up their balance sheets, option C reduce deposits, option D avoid regulation. Correct answer is option B clean up their balance sheets. Question. Infrastructure financing institutions help in option A short-term retail lending, option B financing capital intensive projects, option C issuing currency, option D regulating banks. Correct answer is option B financing capital intensive projects. Question. NABFID can raise funds through option A public deposits, option B government securities only, option C bonds and borrowing, Option D. Savings accounts. Correct answer is option C. Bonds and borrowings. Question. The role of IDRCL in the debt bank structure is to option A. Purchase NPAs. Option B. Manage and resolve stressed assets. Option C. Regulate NRSCL. Option D. Issue licenses. Correct answer is option B. Manage and resolve stressed assets. Question. One benefit of bad bank mechanism is option A. Increase in inflation. Option B. Faster resolution of stressed assets. Option C. Elimination of RBI. Option D. Reduction in lending capacity. Correct answer is option B. Faster resolution of stressed assets. Question. Infrastructure financing promotes economic growth by option A. Reducing employment. Option B. Creating productive assets. Option C. Increasing imports. Option D. Reducing savings. Correct answer is option B. Creating productive assets. Question. A major reform in banking sector post 2015 was option A. Demonetization. Option B. Introduction of each reforms. Option C. Nationalization. Option D. Abolition of RBI. Correct answer is option B. Introduction of each reforms. Question. NABFID aims to reduce reliance of infrastructure projects on option A. Foreign banks. Option B. Commercial banks only. Option C. Government subsidies. Option D. Capital markets. Correct answer is option B. Commercial banks only. Question. The bad bank model separates option A. Good loans from deposits. Option B. Stress assets from healthy assets. Option C. Private banks from public banks. Option D. Urban banks from rural banks. Correct answer is option B. Stress assets from healthy assets. Question. Age reforms include focus on option A. Digital banking and analytics. Option B. Manual processes. Option C. Restricting customer access. Option D. Eliminating page reach. Correct answer is option A. Digital banking and analytics. Question. NABFID is expected to play a catalytic role in option A. Retail credit expansion. Option B. Infrastructure investment ecosystem. Option C. Currency management. Option D. Insurance penetration. Correct answer is option B. Infrastructure investment ecosystem. Question. Banking sector reforms in recent years aim at option A. Weakening financial stability. Option B. Strengthening capital, governance and asset quality. Option C. Eliminating development institutions. Option D. Reducing infrastructure investment. Correct answer is option B. Strengthening capital, governance and asset quality. Thank you very much for your patience. Request for like, subscribe and share.